Is there any specific time or trading session that it's best for your trading? This is a question that I get asked a lot, and it's exactly what we will be speaking about in this video. So which is the best time or session, trading session, to be following the market? Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis daily on my platform, so I suggest you subscribe and most importantly, you watch the video until the end because it will be filled with value. Okay, so let's start by answering the question that brought you here in the first place, which is the best time to actually trade in the market? Is there any specific session that is better than the other one? Well, the simple answer to this is yes. Okay, there are sessions that are better than other ones, but this doesn't mean that you're not supposed to be trading all sessions. In fact, with students, we take trades in all sessions. Okay, there is no reason for which just because something is happening, for example, during the Asian session where you have less liquidity and spreads are higher, it doesn't mean that we do not take the trade. It simply means that we have to factor in the spread. Okay, if for example we have a buy limit, we know that we have to increase our buy limit by a couple of pips just to factor in the spread. And again, if you have a good broker, there is absolutely no reason to not trade all sessions. Okay, we all know that New York, London sessions are the best ones. The worst one we all know that is the Asian session because we have less liquidity, but it doesn't mean that we can't trade it. We just need a good broker. So again, that is the reason for which I suggest the broker that I have in description, because as you will see, you have great trading conditions with very low spreads also during the Asian session. And speaking about this, I also want to share a couple of tricks that with experience I actually noticed. Now there are two main things that I want to speak about when it comes to the timing of the market, okay, how it actually works. Now during the week, what I noticed very often is that, for example, what the market will do is on Monday, if the market wants to be bearish all the week, what will happen is that most of the times on Monday, the market will actually be bullish, and then the rest of the week, the market will be bearish. And at the same time, if the market wants to be bullish all the week, so for example, from higher time frames, it wants to be bullish, on Monday, it will go to the downside to then go long from a better price, just faking everybody out. And another thing that I noticed is that just before the London session starts, you will see the market spike. This is more for day traders. What you will see is that the market spikes to the opposite direction, faking everybody out, and then it starts the real move of the London session. Just a couple of quick tricks that I can give you here. Now, what I want to do today is give you a full breakdown on CHF Sgd. Now you might be thinking, okay, but this is an exotic pair. How can I trade it, guys? If you're not trading exotic pairs, the only reason for which you're not is either you don't want to make money, but I don't think that is the case. And second, you probably have a very bad broker that doesn't give you the possibility to trade them with low spreads. But a quick fix to that is, as I said, what I have in description. Thank me later. Okay, you will absolutely thank me later. So having more pairs on your watch list will definitely give you the possibility to take better trades, because if you have a limited amount of pairs, you can only take the setups that you have. But if you have a lot of pairs, you can select the best setups. Now I want to speak about CHF Sgd because we are running with students a beautiful trade to the upside on this pair, currently getting very close to our take profit. Obviously we are risk-free on the position, and it's a huge, not huge, but very good 1 to 3.5 risk to reward. So 3.5 times our risk on the position as a profit target. And the market is currently exploding to our take profit, but there is another opportunity that will probably line up very soon on this pair, And that is what I want to speak about today. Plus, I want to give you free education during the video, during the analysis. So let's start our full top-down analysis from a technical perspective, and then obviously we will check what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing in the market. And by obviously following their orders, we can be getting an advantage over our competitors in the market. So let's start our full analysis. What we can see, first of all, from the monthly, we can clearly see that the market has created a strong impulse followed by a correction. And this is a simple impulse, correction, and impulse pattern in the market. So what you want to see after this is the market at least try to create a continuation. Okay, try to create a higher high. Now, if you want to measure this retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see is that the market just tested here the 0.382 Fibonacci retracement before starting this move to the upside. So when the market retraces only to the 0.382, it means that this is a strong trend. Okay, we are in a strong trend and the market is moving to the upside quite aggressively. Let's go down on the weekly and see what kind of situation we have on the weekly. Now, on the weekly time frame, we can see one very important thing, that the market, after rejecting the 0.382 on the monthly, which was here, what did it create on the weekly? On the weekly, it created this candle here. Okay, now every time that you see a candle like this, okay, with a big body, in this case it needs to be green if it's bullish, a big green body and a long wick, what you expect is the next candles to fill in the wick, because this wick simply means that on lower time frames you have an impulse and a correction, which is the wick itself, and then you expect the continuation to the upside. So if you see something like this on the weekly or monthly, you definitely want to see the next candles fill in the wick. We spoke about this many times. I also made a video just about it. Now, if we go down on the daily time frame, what we can see. Now, on the daily, first of all, you can see again the pattern that I just spoke about. In fact, as you can see, this daily candle here a couple of days ago, again, also on the daily was filled, and the market is filling it as we are speaking. Okay, so you can see this pattern just is something that you will see happening over and over again on all time frames. Now, on the daily, what kind of situation we had when we executed the trade, and where is the next opportunity for this pair? So when we executed the trade, first of all, we had a market that, after creating this W formation, created a move back down to the neckline. Now, in general, if you have a market that creates a W formation like this, you want to see the market make a move back down to this zone here, which is obviously the neckline of the formation, aka the previous resistance, which is now turned support, and then start the next move to the upside to complete this impulse correction and impulse pattern to the upside. So after completing the zone at the neckline, we wanted to see the market start the continuation to the upside to try to complete the pattern that we already have identified on the monthly. In fact, if you remember, on the monthly, we said that we have an impulse correction and we want to see the continuation to the upside. So going back down on the daily, that is exactly why we went down on the 4-hour time frame to take our trade, because as you know, monthly, weekly, and daily are for direction. The 4-hour is the best time frame for entry. And in fact, we are currently running in a huge risk to reward to the upside trade, already risk-free, meaning that if the market will go back down, we will anyway exit the trade with a minor profit. Okay, so what did we execute the trade exactly from here? Obviously, I can't share the rules of our strategy. What I can share is just a couple of a basic technical analysis concepts. For example, the market clearly created an M formation retesting the previous low, which is definitely a good opportunity to take a long situation. This is just basic technical analysis that all of you are supposed to know, but unfortunately many people actually charge for this kind of knowledge, so their paid courses will just teach you this, but this is just basic technical analysis that all of you are supposed to know. So this is the reason for which at the moment we are running this nice trade. Where is the next opportunity? Okay. Now, before I show you where is the next opportunity in which we will be looking for a capitalizing opportunity with students, I want to show you what we have from a COT perspective. So commitment of traders, as I said earlier. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. Okay, so if we take our COT data, so the commitment of traders, what we can see. Now we have to first of all go and see what we have from a CHF perspective, because unfortunately SGD does not report. Now what we can see with the CHF, we can see that clearly we went from having 8K net positions all the way down to having 1K net positions, and then again we increased to 4K again with more longs added. Specifically 1K longs added with the last report and 1.8K shorts closed. And what we can also see is that the longs overall increased from 9K to 12K, and the shorts are less than the longs with a 20.4% short exposure and 30.9% long exposure. So if the increasing of the net positions will continue in the short term, we can expect more CHF strength, and most importantly, we need to see SGD weakness, which is something that also from a fundamental perspective we can definitely expect. And in fact, the market is continuing to make its impulse to the upside. Now, from a pattern perspective, if you remember, on the monthly we said we have the impulse, the correction, and we want to see the continuation to the upside. And on the daily time frame, what do we have? We now have a very important structure level which the market has broken. Let me show you. This level here was acting as very strong resistance here, resistance here, resistance here, resistance here, resistance here, and now all this resistance is turned support at this area, and the market is creating the impulse to the upside. From this low, from this red candle, starting this big move to the upside. So this is a very strong support demand area for this market. So how we will be approaching the next trade on this pair? After the market will have completed the impulse, what the market does is starts retracements. So we will be waiting for the retracement back to test this very important structure to grab some liquidity. And then what we will be doing is monitoring price action on the 4-hour time frame inside of this area, because always remember, monthly, weekly, and daily are for direction. The 4-hour is the best time frame for entry. So we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the continuation to the upside and completion of this impulse, correction, and impulse pattern to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.